everyone, you're tuning into Agent on Duty with myself, Stacey Prieur, and today I have my traditional mortgage brokers joining me in studio today. Well, I guess not in studio, but on Zoom. Brittany Klacer and Mandy, Leishman. Today we're going to talk about lots of different things. One of the things that I've been hearing so much about is this hypothetical bubble. I'm actually like getting perturbed hearing about this bubble. When's the bubble gonna burst? When the bubble bursts, all the market's gonna collapse and all the homes are gonna go down. Oh, this bubble. I don't think there's actually a bubble. So guys, I wanted to get your take on this because dealing with mortgages, you guys have been in the industry for quite some time. Brittany, I'm gonna throw this one to you first. Do you think it is an actual bubble?
Well, Stacey, I don't think there's going to be a bubble. What's going to happen is there will be a plateau. So it still will go up, but we won't see that huge 100, 200,000 over list offer. I think that's, like I said, that's going to be the norm. We're going to see more of a plateau, an evening of the market, balancing, but I don't think we need to worry about a bubble. Here in London, at least.
Mandy, what's your take on this hypothetical bubble?
I agree with Bernie, and it's really not a bubble. There's going to be no bursting. The market, there's no indication of a slowdown. People are always going to need homes. Hopefully, like what Bernie just mentioned, is that we're going to stop seeing the clients that are offering $200,000 or $300,000 over asking and just beating out everyone. But yeah, for sure, a plateau. But again, no burst. Real estate it really won't stop, and there'll be no slowdowns.
One of the things that I've been scrutinized, I guess, for saying, I don't actually think it's a bubble at all. I think it's an immigration pattern. So I think there's a lot of people that are immigrating to London based on like a few different reasons. We're turning into a tech hub and obviously a health hub. Also, we're not a border city, so our restrictions have been a lot less than what some of the other major towns have been, like Toronto, Windsor. But one of the things that has been a huge issue, again, why I don't think this is a bubble, I think it's like for a bubble to burst, we would have to see like 30,000 people leave London all at once. And then that's when I think properties would start to devalue because everybody's so afraid that they're going to pay so much for this home. And then all of a sudden it's going to be worth 100 to 2,000 less. I don't think that 200,000 less, not 2,000. And I don't think that that's ever going to happen. I think what we're going to see is, like Bernie and you had said, there is going to be a plateau. When we stop seeing so many people migrating to London, I think what we're going to see is market like equilibrium, where it'll level off like it did in 2008, 2009, 2010. And then what we did see from a real estate perspective is homes were staying on the market a little bit longer. They were selling, but they weren't selling within an hour. So like it was nothing to have a home on the market for 3 to 6 months in 2012. So I think that in terms of bubble bursting, I don't think it's going to happen. I think definitely there's going to be that plateau. And I think definitely we might see an equaling off or cooling off period where things stay but grow incrementally, not by leaps and bounds. For anyone who's worried about this bubble, or if you guys are like sitting there at home and you're like, no, I'm not gonna move because of this, or I'm gonna rent until all the homes like start devaluing and get a good deal. You're not, it's gonna continue to increase, whether it increases in leaps and bounds or whether it increases in small increments. I think that's where we're really gonna see things.
One thing that you brought up that's pretty relevant, and Bernie, I'm sure you've seen this, is when the pandemic happened and initially COVID became the norm, what's happening is that a lot of people are able to work from home. So we're seeing a lot of Toronto buyers that don't need to spend the money that they had to spend to rent in Toronto. Yeah. So they're coming in and buying up a lot of our inventory. So absolutely, you know, we're seeing immigration and in a lot of different shifts in the industry.
I don't disagree with that. And one of the things, I'm glad that you brought that up because I want to get into the builder's market when we get back from break, because we are going to talk a little bit about people moving and migrating over and having that inventory there for them. So guys, stay tuned. We will be right back after this. All right, guys, we are back from break. If you're just tuning in, you're watching Agent on Duty with myself, Stacey Prieur, and my special guests today, Bernie Klacer and Mandy Leishman. We were just talking about the bubble versus no bubble, and I'm kind of glad that we're all on the same page that there is no bubble. Obviously, we don't have crystal balls, but from what we know and where things have been going, we want to just shift that mindset. One of the other things I wanted to get into with you guys is new builds, because that's been a really hot topic right now with people, like, because there's not a lot of listing resale, people have been flocking to new builds. So one of the things that I wanted to talk to you guys about was getting mortgages on new builds, because usually the deposits are higher. Also right now, the cost to build is insane, and there's been stop builds. So I wanted to pick your brains a little bit on that. So Mandy, I'm going to direct this question to you first, because you actually did just move into a new build. So how was that for you? I know that you had some issues with things, and I just wanted to, you know, for anyone who's thinking about that, what's some advice that you give them?
Yeah, great question, Stacey. So there's not a lot of land right now, and builders are holding on to any land that they do have. Well, that's kind of the rumor in London right now. There's obviously issues with purchasing your own land and financing it. Banks typically don't lend out, and if they do, they're doing a 50% loan to value. Most credit unions will do mortgages on land, and they're called builders mortgages. I didn't really have issues. I had a great builder, and my husband and I bought our land privately. So Bernie and I were talking about your options. If you were to buy land, you can refinance your home. We've got access to private lenders, or you can go the traditional way with the banks, and we mortgage the entire thing, but the builder has to hold on to that land, unfortunately.
And just from a personal perspective, it's kind of good to hear that. Now, Bernie, you have a little bit of insight too with this, and we had a quick chit chat, and I would love for you to share your views on this.
The problem right now is all the builders are sold out of inventory, as we know, and you know, as an agent, they're all gone. So the prices have gone way up, and there's actually bidding wars on new builds. So it's crazy. And also what the builders are doing is they have phase 3, phase 4 to release, but they're holding on to these phases because they don't know what the cost to build these homes are, because just the simple trusses that build the houses have gone up to 40,000. They used to be 17,000 for an average home. So that's gone dramatically affected the cost of everything. And also there's a huge trade shortage. So it's builders mortgages they're struggling right now, and the builders are going to hurt because they don't have any new inventory to sell. So it's eventually going to catch up to everyone. I don't know when, but unfortunately it will.
My guess is there wasn't going to be a lot released in 2021, but 2022, that's when most of the phases were scheduled to open. And I know you had recently purchased a couple condos, right? Mm-hmm. And you were looking at some investment properties. Do you have any insights on this as well? Like, am I out in left field thinking that?
No, I have a couple of things on speculation that the market will keep going up. They were good deals. They sold out in one day, so I was very lucky. So I can't see that much is going to change. It's just I feel bad for the Londoners that are trying to get in the market, or the local people that are trying to buy, and people that are trying to move up from the regular homes to new builds. They just can't get into the market. So you as an agent, you're having a tough time finding them a product.
Oh yeah, it's like elbows out here. We're just like, all right, guys. It's literally, I keep joking every single time I go and I put in an offer. I don't know if you guys have watched The Hunger Games. I have some younger nieces and nephews, and I like binge watch those. So every time I do, I'm like, may the odds forever be in your favor, Effie. But yeah, that's what it's like. Literally, you're going out. It's like a jungle out there, and it's been insane. One of the other things that I wanted to talk to you guys about real quick when we get back from break is mortgages on vacant land, because I know we briefly touched on that, but I want to unpack that a little bit more. Just because I do know some people are thinking, like, I've heard people saying they want to convert like those big crates, those into like homes. They've seen all these like DIY things. And I just wanted to see from a mortgage perspective what your thoughts are on that. So stay tuned, guys. We will be right back. All right, guys, and we are just back from break. If you're just tuning in, you're watching Agent on Duty with myself, Stacey Prieur, and my mortgage specialist today, Bernie Klacer and Mandy Leishman. All right, guys, we were talking about bubble versus no bubble. We were talking about the builders, and now I want to talk about vacant land. So, Mandy, you'd kind of touched a little bit on this about vacant land and how lenders don't really lend on that. So, what if someone does? So, for example, I had a client and they purchased in Dutton, and then they wanted to purchase the land behind them because they wanted the park view. And the builder is like, well, no, like you can't just purchase the land and not build on it. So there's a covenant on that. But number two, you can't just get a mortgage on vacant land. How does it actually work?
Having experience in purchasing land, not from a builder, I definitely have. So we don't have access to banks that will mortgage a piece of land. We do have access to private lenders that will lend a much higher interest rate and a little bit more costly, right? A lot of times when I get clients that are looking to buy their own land, I do direct them either to Libro or BMO, just because unfortunately, Bernie and I don't have the lenders that will mortgage on that. But we do have access to private lenders if it's a short term, and clients are willing to pay a little bit of higher fees. The other thing that they could request is that the builder purchase the land and then make it all one purchase agreement with the land and the build. Might be a little bit more expensive because the builder is taking on that cost. Bernie, your thoughts?
Same thing. I just actually purchased a piece of land, and we discussed about this earlier. You can also take equity out of your existing home and pay cash for the land. That's one way to do it, but buying land is a bit of a challenge. People think you could just put 5% down, which is not the case. But yeah, the 50% is the norm. If the builders buy it, like you said, it's expensive. But if you buy it on your own, then there's other hurdles to getting permits and building self-builds. And Stacey, we could talk about self-builds in another episode. That's a whole nother ball game. But anyways, land, basically 50% down, we'll go from there.
Awesome. All right. And I think you just agreed to doing another episode. So I'm just going to call you out on that one. One of the things that I do want to talk about, and this has been a really interesting thing, is we're seeing, because the average home price is starting at $500,000 now, like the average sale price in London, I think, was clocked at 580 the last time I checked. So like that's quite hefty, as opposed to when I first entered into the market, it was 350. And 350, you could get a decent home, like a pretty big home. And now like those homes are selling for like 850. So it's kind of crazy. Now, one of the things I wanted to talk about is, so there's a stigma with co-signing. I know that the older generation, you know, co-signing was kind of viewed and frowned upon, because, you know, if the kids weren't responsible, weren't doing things properly, then, you know, then the parents are on the hook. But there was an interesting product that I thought that you guys had, which is the cashback. Bernie, I think you said it was the cashback up to 3%. Mm-hmm. So one of the things that we were talking about, and I think for anyone who's watching this, yes, that's right, I'm looking at you. If you're a parent and you have children who are responsible renters, I don't know why you're not taking money out of your own home and your own equity and helping them purchase a home, because essentially you'd be growing your own investment portfolio. You would have, there's different ways around it. You could be on the mortgage, you can actually own 2 properties or co-own a property with your child where the equity is going to grow. So they're not paying someone else's mortgage. The return rate now on real estate is higher than any RSP, stocks, bonds. So one of the things that I wanted to unpack with you guys is this cashback offer, because what you were saying is the parents could actually lend the children the down payment, but then get cash back afterwards, correct?
That's correct. So so the parents would lend them the 5% down, and so that would actually have to go into the kid's account. There's a couple lenders that Mandy and I use that have this product. The interest rate's a bit higher, so I'm going to be upfront and honest with the viewers. It's a little bit higher because you're going to lend that in, but they will get that 3% back on closing. So really, the parents only really need to gift or lend them 2%. And with the price at $500,000, that's, you know, that's a $25,000, you know, gift that they have to give. So if you give that 3% back, then it's really only about $8,000 or $9,000. That's a lot easier for the parents to kind of say goodbye to or pretend it's never going to come back. So it was kind of a strategy that I came up with, that I've done it a couple times. But the biggest thing is the parents have to be on board to put all the money in the kid's account, because that's the CMHC guidelines. It has to go right in the parents' account. I mean, the kid's account.
Yeah, no, absolutely. And how long does it have to be in the kid's account for?
Just a week or two before closing.
Okay. Yeah. Well, that's not too bad. Because I know some stipulations, it has to be 90 days, doesn't it? Or am I just pulling that number out of my...
That's if the bank's verifying your own down payment. But a gift, as long as a gift letter, and we do all the due diligence for the bank, some like it 30 days, but it's usually 15 days or 16 days before closing is what I tell my clients, just so that it doesn't cause any red flags or anything.
Awesome. Now, Mandy, have you thought about this strategy, and have you used it at all in your practice?
It's fairly new. I haven't had the opportunity to use it yet. It's something that I'll definitely be promoting. I was telling Bernie earlier, I am seeing this year in particular, a lot of my clients bringing on their parents to co-sign. And I typically start the conversation off with, you're going to have a confidential conversation with the children and a confidential conversation with the parents, so that mom and dad don't feel like you're discussing their finances. But yes, you're right, Stacey. You know, if parents have a little bit of leverage and equity in their home, or money in the bank to help out their children, why not? Because it's the only way to get a lot of people in the market. We've got these clients that have these great careers and salaried positions, but because of the pricing of home and the way it just continues to go up, they're never going to be able to get in without using a little bit of income from mom and dad. And Bernie and I were talking about this earlier too. Each scenario is a little bit different. We have to make sure that mom and dad aren't on the move and want to start investing or downsizing or buying a bigger home because they've got grandchildren. So those are the questions that we ask prior, and make them understand that, you know, if they are in a good position, ultimately they're helping their children out and doing something really good. And then, like you said, building that portfolio of investments yeah, I think it's a great idea when parents can help out. But keep in mind, not all parents have the credit or the income. You know, some parents have retired and don't have a pension, and they're just collecting OAS, and they don't have the money to help out. But we're seeing majority of parents being able to step in and help their children out for sure.
No, absolutely. And then on the flip side of this, I was actually, so I have I joke around. Shout out to my girl gang if you're watching. Well, I hope you're watching because we're best friends. But we were talking about going in and potentially buying a cottage together. So how would that work if we wanted 5 people on title? So for anyone out there who's watching, say you're in your 30s, 40s, and you want to invest in something, in a vacation home or a vacation cottage with other people that you know, that have stable income and they're responsible. But you want to do some sort of a timeshare where you rent out the cottage when neither of you guys are using it, but you want to invest a chunk of property, because a chunk of money in this, because I was thinking, like, again, with the $25,000 down deposit, if each of us put in 5 and then we got a cash back on it, it's not much skin in the game for us to get into a property and get ourselves a cottage. Whereas we're paying like $2 to $3 grand because we have champagne taste and we're renting this cottage. So I'm like, why not spend that money and actually invest and own something? How would that work? Are we still able to do this if we're all in good financial standing?
Yes, you can. There's 2 ways to do it. If it's your friends and not family, you're gonna have to put 20% down. Max is 4 people on the mortgage or on title. So, but if you're friends, you're not family, you could do it with 20% down. But if you're family, say you and your parents, or you and your brother and her husband, and you could do it as a second home and put 5% down. As long as it's a 4-season cottage, it's got to be 4 seasons. It can't just be 3 season. And you can put 5% down. So there's 2 ways to do a cottage.
Okay, nice. Okay. Well, that's awesome. So one of the things that I wanted to get into is this stress test. This was recently introduced a few years ago, I believe. And now I heard there's another update. Mandy, do you want to talk a little bit about that?
Yeah, for sure, Stacey. So they just announced that as of June 1st, they are increasing the qualifying benchmark rate on conventional mortgages. So anyone putting down less than 20% will have to pass a stress test at 5.25% versus the 4.79 that we're sitting at. Ultimately, it sounds like a big deal. It's not really going to make that big of a difference. Bernie and I were talking earlier again, and it's about $20,000 of affordability that you're losing. But in today's market, $20,000 is a big deal. And I think what they're trying to do is just help kind of curve, like you said, the bubble that everyone thinks that we're living in. So that's what's happening. Now, all deals that go in before June 1st, accepted offers, they're still qualifying at what our qualifying benchmark rate is right now. Anything after June 1st will be the 5.25%.
So for anyone who doesn't know the stress test, Bernie, can you kind of explain that a little bit to our listeners?
The stress test was introduced, I think, in October of 2016, and that's where we used to just basically do the mortgage affordability based on the current rate, but they brought in this benchmark stress test, which is at like 4 or 5%, which is 3 points higher than what you actually get. But that was supposed to curb this whole real estate thing, but it just kept going. And now they're just trying to do it more, and they're going to increase it from 4.79, like Mandy said, to 5.25. It's just this, you know, in case your payment goes up to 5%, we're just protecting the government and everyone. That's what it's for. And I'm not sure if it's going to work.
But no, that's good. And that's the other thing too. I know a lot of people get nervous because they hear that the stress test is going to increase, and then they think that interest rates are going to increase. That's not necessarily the case, right?
That's correct. Actually, the rates have dropped dramatically, and the stress test has not dropped in comparison with what the rates. Like, we were giving rates at 1.5 fixed 2 months ago, and the stress test was still at 4.79. So yeah, there's a big buffer there.
All right, we are going to take a quick break, and we'll be right back. And we're back. If you're just tuning in, you are watching Agent on Duty with myself, Stacey Prieur, and my guests today, Bernie Klacer and Mandy Leishman. And we've been talking all about mortgages. So guys, if anyone is looking for a mortgage, Bernie, how can they get a hold of you?
They can call me, or they can visit my website at justaskbernie.ca.
All right. And what's the number they can call you at?
519-857-8575.
And Mandy, you're on deck. If anyone wants to reach out to Mandy to get a mortgage, how do they contact you?
Yeah, same thing. You can call me on my cell at 226-268-4331, and always happy to have calls and texts, or you can email me at mandy@mortgagemandy.com.
All right, guys. Thank you so much once again for coming on the show. I love having you guys on. It is tradition, 3 years going strong. And as always, thank you guys for watching. We talked today about the mortgage bubbles. We talked a little bit about builders. We talked about vacant land. And if you wanted to invest with your friends or family on a cottage, how would you do so? So thanks again so much for your valuable information, and we will see you next time.